What's up, guys? It's November 21st, 2024. Hope you guys had a good trading day today, as always. So yeah, let's get into it. Again, I like to review the day through the market cycle and leg count. And I'll talk a little bit more about leg counting because I don't think I've actually defined what a second leg is. Well, I brought it up, so I'll talk about it right now. A second leg, per the literature, are two different things. A second leg is here, and then the opposite bar starts the second leg. So you could say 21, pull back, 22, third leg, 23, 24, 25. Or what I like to do, a second leg is also a trend line break. So here you see how we have trending highs, trending lows. No low takes out the prior low. So this is a channel. Bar 42 is the first pullback because it takes out the prior low. This is a double bottom. So that would be the start of the second leg. Then we have a third. So leg one, pull back. Leg two, 46 takes out this trend line. That's the start of the third leg. Leg one, pull back. Leg two, pull back. Leg three, very deep pullback. Leg four. What do I say every single review? When we're in leg three, we're in a trading range. So leg one for the bears. Leg one, pull back. Leg two, pull back. Leg three. It's a wedge bottom into support. And look, we went range bound. Leg one, 61 breaks the trend line, pull back leg two, 63, 64, 65. It's a wedge bottom. This breaks this trend line, leg one, pull back leg two, deep pullback, testing this, leg three. And then for the bears, we could say leg one, 76 breaks this trend line here. So now that's at leg two. Leg one, pull back leg two. And of course, we all know the standard way. If we see an opposite bar, that is also the start of a leg two. I'm looking if I could see an opposite bar that doesn't break the trend line. Okay, here we go. Here's kind of one. I'm reaching. Leg one, opposite bar. Leg nine breaks the trend line. Bar nine breaks the trend line. Leg one, pull back. Could argue 11, or we could say this is a trend line. 14 doesn't break the trend line. 15 doesn't break the trend line. So this would be considered an inside bar. This is also a strong breakout. Could reset the count. 18 is the first trend line break. You see, leg one, pull back. Leg two, 21 breaks the trend line. Leg three. Here's another good example. 24 actually doesn't break the trend line, but it's an opposite bar leading the trend, so you can count that. Leg one, pull back. Leg one, pull back. Leg two, pull back. Leg three, pull back. Leg four. Ish. Leg one, pull back. Leg two, pull back. Leg three. What matters is you're doing it from a consistent perspective and it falls in line with the market cycle. So yeah, now you guys know what I'm kind of looking at when I'm counting legs. Probably should have said that 55 videos ago. But anyways, let's get into the daily chart. It's interesting what's going on here, guys. So I said it a little bit ago. This bar is a good buy. This bar gets its second leg here. So leg one, pull back leg two. And now this was an inside bar. And now we're rallying. We have a trend line here. When this trend line gets broken, that will be the start of the leg two for the bulls. You could also argue this is a trend line. Leg one, pull back, leg two, pull back, leg three. So I study Al Brooks and Ali Morning-Afsari. I've been studying Systems Academy all year. I've back tested this all year. So if you want to get more into it, please message me on Discord. I'm not going to send you my backtesting results. I'm going to show you how to backtest it. And then because I show you stats that does nothing. If you go into the markets and you study these leg breaks, I promise they will start to become more part of your subconscious. 2 seconds here. Okay, let's get started. We have a big gap up. Yeah, this was a menacing 2 bars. I'm red today. I lost about $200 right at the end of the day. I fell apart here and I didn't take profits down here and it snapped against me. I scaled in at the EMA. I think this was a double top and we're going to get a leg lower. So it was 1, 2, and then 3. And I had one winning trade that actually netted that was a lot of points. It was like 20, 30 points. But the volatility was high today and I didn't realize it until I got short. I shorted the high here, ended up shorting a double bottom. And this bar pulled against me. I was like, wait a minute, that's a 20-point bar. Get out of here. 16. Wait a minute, right there at 20 points. I could not believe it was a 20-point bar. I was like, what is the volatility today? But look at that. I mean, right there is 50 points off tops. Two bars made 50 points. So trust me, I'm gonna remember this lesson because that. Oh man, I froze when I realized I was a 20. I haven't had a 20-point loss in so long, guys. Uh, Markets were in a tight trading range overnight. We rallied, super deep pullback, wedge bottom. Ooh, bar 114 was testing the breakout. Did not catch that. And we rallied for the rest of the day. Oh man, that's at the time I was flustered, but now I'm kind of laughing back at it like, 50 points off two bars. Yeah, volatility is up. I hope you guys did not get caught in that. But if you did, take it with a pinch of salt, learn your lesson, keep it moving. So yeah, bars 1 and 2, deep pullback. I think this puts the market into a trading range. Well, it does because we had a rally and now we have a deep pullback. 3 and 4 is a pullback for bars 1 and 2, and then they get 3 legs lower. This is when I entered the markets. 3 bars in a row is my setup. Deep pullback. See, this is where I made the mistake. I also got short here and then I hit out here. This is where I made my mistake. In trading ranges, we get deep pullbacks, and I took a shallow pullback. So that's what I get. I acknowledged we were in a trading range, and I took a shallow pullback. So I shorted lows and get punished. So this is what I get. Anyways, let me change this to the 1.5 dang-a-lang-a-dang. So 3 bars, put it here. Look at that. Trading range, we go from 1R. It was met to the tick. Bulls get a rally, about 5-bar rally, 1, 2. So here, and when we break out, it restarts the leg counts. So we just count 1, 2, 3, 4, 5. Yep, 5-bar rally. Bar 20 is the first pullback. So I bought that, looking for leg 2. I got trapped into this wedge bottom, but I was confident this rally would get a second leg in on its own, and it did. I got out around here, and then I bought more here, and that's where my trade went red around here, thinking that we were gonna vacuum up to 599. This was my target. Because yeah, I guess I was asking for too much. Hey, I'm not mad. This is my second red day this month. We have 6 trading days left, so I'm gonna bring it home. 5-bar rally, bar 20 first pullback. I think is a good buy. 21 bull bar. 22 is the second pullback. 23, 24, 25 completes the second leg because we travel 1 tick past that, and then we get a deep pullback, putting us in a trading range. This is also a wedge bottom. Wedge bottom, wedge bottom, wedge bottom. If I had to say a theme, today was wedge bottoms into the EMA. Again, we get another very strong rally. 32, 33, 34, 35, 36, 37, 38, 39. Why did I count that? I meant to say 1, 2, 3, 4, 5, 6, 7, 8. We have an 8-bar rally. I was confident we were going to see at least 1 tick higher above 40, so I bought 42, and we saw that right away. But my greedy ass held for, you saw my target. The more bars we have in one direction, the more higher it is the pullback, and the more higher it is that we get at least 1 tick above that. You guys see how we trade probabilities, right? We read price action, and then we take the setup based on probabilities. Highest probable trade is the second leg, whether that be 1 tick prior or we get a symmetrical second leg. In range bound price action, we don't get symmetrical second legs, we just get a second leg. In trends, we typically get symmetrical second legs because they go on forever. I could pull up any trend and act like a guru. Okay, hold on. I just want to find a really good trend real quick, and I'll show you it doesn't even matter. Okay, here's a trend, right? Okay, look, wow, my target was met. My target barely met. If I didn't do it so sloppy. Target's met. That target's barely met. Oh, here's a pullback. Oh, look, target's met. So in trends as well, if we have multiple gaps open, go for that symmetrical target. In trading ranges, which is more likely to happen, I see how I'm kind of like disproving myself. But you guys see how in trends we tend to have more symmetrical legs because they go on forever. Let's get back to the price action. big rally, wedge bottom, another 9-bar rally, good enough for its second leg. And then what leg are we in here? Leg 1, pull back, leg 2, pull back, leg 3. That puts us in range bound price action, and that's what we got. We have range bound price action. It's typical. I got rid of the arrow yesterday, now I'm relying on it. So let's do it from the bull perspective actually real quick. We have range bound price action. Why did the thickness change? Range bound price action with moment. So this is showing this bull leg here. This is showing this box is demonstrating this. And this box is this line is demonstrating momentum. We have a strong leg, this leg. And then we go range bound. The chances of this getting spit out is high in the same direction. Think of if you shoot a bullet into a gun. Well, if you shoot a bullet into a gun. If you shoot a bullet into a box, the momentum's going to carry it through the other side. And that's kind of this thing. This is the momentum. You shoot into a box, and then we get that 66, 67, 68, 69 momentum, and then we go sideways to down. That's the market cycle, right? It's breakout, channel, range. Here's the breakout. Whoa. That just tweaked. Here's the breakout. First opposite bar 42 creates channel face, leg 1, trendline break, leg 2, trendline break, leg 3, leg 4, leg 5, leg 1, pull back, leg 2, second leg trap, leg 1, wedge bottom, gets its second leg right there. Right, counting the market cycle is all we need. You know, trading can be very complex or it can be very simple. It's how you want to make it. I promise you, I promise you, the simpler you make it, the more money you stand to make. All right, simplicity. Turning a complex subject simple is the trick to making money. 1-to-1 was met. We're in a trading range right there, bar 68. That's the start of the pullback, right? The channels are the market's always in transition. So the start of this bear channel was 26. The start of this bull channel was the low of 30. That's a double bottom. That's met there. And again, you can scalp any of these bars for 1-to-1. More shallow targets. I wouldn't even be mad at that. I probably should have taken that approach today because we were range bound with a lot of volatility. I think it got the best of me today. I'm upset at myself, but I mean, so far I'm gearing up to have my best month. So yeah, guys, today was a little bit shorter. I kind of wanted to talk about what I'm looking at. I've been talking about legs for so long, I don't think I've ever clearly defined it. Again, this is not made up crap. I got this from Ali Moyasari. And let me just draw in the gaps before I forget, because we did have a lot of gaps. So in trading ranges, gaps get closed. I really encourage you guys to go past this channel into his website and start reading his literature, start reading his books, purchase some of his videos. Ali Moyasari is a student of Al Brooks, so you're not actually jumping ship. I like to think that Al Brooks teaches you a very holistic view of the market. He teaches you the market cycle. His course is written within the market cycle. If you go back and look, it starts with breakouts, then channels, then trading ranges. That's the market cycle. And then Ali Moyasari, he will teach you how to get in and out the markets. He's going to teach you the nuances, the things that you might overlook. He's going to shine a blaring light on it. So I've studied Al Brooks for I'm in my third year of trading. My first year of trading, I was pretty much caught in the Discord call out Hobnosh. Second year, I found Al Brooks. Third year, I found Ali, and I plan to stay within this ship because the learning is endless. The more we learn, the more we earn. Look here, guys. This is rough. There's some more gaps. I'm sure I missed a couple. There's a gap right there. I see it. Trading range price action, right? Wedges, triangles, is trading ranges. Gap gets closed. Gap gets closed. Gap gets closed. Now the top of the trading range is here. And in actuality, all gaps got closed. This gap got closed. There's another gap right there that gets closed. But as the price goes on, now we have open gaps with 4 or 5 bull bars closing strong on their highs. This is a breakout. You have to respect. If you don't want to trade the breakout, don't. But you have to respect the breakouts. You can wait for that pullback. You can buy the close, scalp out on the pullback, and then trade the channel phase. first pullback's a channel. Started the second leg, and then look, the gap eventually get closed. This gap's one of these gaps stays open. Yeah, 16, 16's gap, 18's gap, or 16, 17's gap. They stay open. It gets tested. Bar 19's gap gets tested with 30, and then we rally. Then we have these three gaps staying. We have these two gaps staying open. Hope you guys had a great day. I hope you guys took advantage of this volatility. There was a lot of money to be made today, up or down. If you're going short, scalpy. If you're going long in the first or second leg, you can hold for a swing. Hope you guys had a good one. If you learned something, share the show. I appreciate your support. If you have any questions, don't hesitate to drop it in the comments or hit me up in the Discord. Have a good one, guys. I'll talk to you later. Bye.